Welcome to the Deep Dive. We're here to cut through the noise and get to the core insights. Today, think about an investment frontier you might not expect. That shimmering edge where land meets the sea. We are talking about marine infrastructure. Now, it's a sector getting a lot of buzz, but it's often just seen as ports and docks. It's actually way more expansive, much more strategic than that.
Exactly. And that's what our deep dive is about today, marine infrastructure investments. We're going to focus specifically on, well, how cruise terminals are changing and also the bigger picture of waterfront developments. Groundbreaking work from the A-Land platform, led by Swiss economist Dr. Pooyan Ghamari, really highlights this. These aren't just buildings. He calls them powerful economic multipliers.
Economic multipliers. Okay. So they blend logistics, hospitality, even branding all into one.
That's the idea. Single compelling opportunities.
Right. So our mission today is really to unpack why these developments are suddenly such high-demand sectors in global real estate. We want to explore that surprising strategic value they hold. And then look at how new trends in digital finance and sustainability are, frankly, radically reshaping this whole space. You're basically about to get a shortcut to understanding a really dynamic investment world.
Yeah.
So let's start by maybe challenging a common image. When you hear cruise terminal, what comes to mind? Probably just a functional building, right? Ships dock, passengers move through.
Pretty much the standard view. But the reality is quite different now. Cruise tourism has it's exploded. It's a multi-billion-dollar global industry. And as that's happened, the ports themselves are not just transit points anymore. They're becoming destinations.
Destinations in themselves. How so?
Well, that's the key shift. And it's something Dr. Ghamari's work really points out. Investors now see these terminals as vital gateways to a whole ecosystem.
I like the ecosystem.
Yeah. Retail, hospitality, cultural experiences, all connected to that terminal. And beyond just that surface level, there are two main advantages that really stand out strategically. First off, they offer incredibly resilient revenue streams.
Resilient how? More than other types of real estate.
Think about it. Yes, they get passenger fees, that's consistent, but importantly, those long-term retail leases. For the shops inside the terminal, they often include minimum guarantees, or sometimes index-linked escalators.
Ah, okay. So even if tourism dips a bit.
Exactly. There's a predictable revenue floor that's quite different from, say, traditional high street retail that really suffered during recent downturns. It offers a certain stability.
Makes sense. So it's not just passenger numbers, it's the structure of those commercial contracts inside. That sounds solid. What's the second big advantage then?
The second one is their role in urban integration. It's profound. These terminals aren't built in isolation. Not anymore. They frequently act as anchors for these huge waterfront regeneration projects.
Anchors. So they're part of a much bigger city plan.
Precisely. It's not just about one new building. It significantly lifts the value of all the surrounding land. It creates jobs, injects energy. You get this positive ripple effect right across the city's fabric. For cities and for investors who see that bigger picture, it's a really strategic play. It's about interconnected growth.
That's a really powerful way to think about infrastructure. How one piece impacts the whole city. And speaking of that wider impact, how are these larger waterfront projects evolving? You mentioned regeneration. We're seeing them packaged as these comprehensive multi-use ecosystems, right? Like luxury apartments, offices, shops, cultural spots, even big green parks all bundled together. It sounds like they're building mini cities on the water.
They are essentially building mini cities, and it fits perfectly with these global trends towards, live workplay environments. It's especially important in really dense urban areas.
Live workplay, we hear that a lot.
We do. And if you zoom out, research, including stuff from Alan's blog, talks about the compounded benefits when these projects are done well. You get higher occupancy rates for the housing. Naturally, people want to be where the action is.
Okay, so the residential side thrives.
Right. And that means more people walking around, which means more customers for the shops and restaurants.
And boosting the retail side.
Exactly. Increased foot traffic, higher revenues for them. And the overall effect, it actually elevates the city's whole brand, makes it more attractive for tourism, draws in more investment. It really can become this self-reinforcing cycle of growth and value.
A real engine for urban growth then. Okay, that covers the physical space and its use.
Yeah.
But let's shift gears to how these massive projects actually get funded. Digital innovation seems key here. What exactly does tokenized infrastructure mean? Especially for something so solid, so tangible, like a cruise terminal. Why is it revolutionary?
It's potentially a game changer for funding big projects, definitely for infrastructure. Traditionally, these are very illiquid assets, right? They need huge amounts of capital upfront, often from single sources. Tokenization changes that. It lets you digitally represent ownership or rights related to the project.
Digitally represent, like what?
Well, you could tokenize equity stakes or perhaps shares of future revenue or even specific slices of the debt. This fundamentally changes how quickly capital can be deployed and who can actually invest. The benefits are sort of threefold. First, accessibility, meaning smaller investors, even people wanting fractional ownership, can get into these massive marine infrastructure deals that used to be just for the big institutions, the big funds. It really opens it up.
Wow. So theoretically, I could own a tiny piece of a future port's earnings stream.
Precisely that. That's the potential. The second big benefit is liquidity.
Liquidity.
Yeah.
For infrastructure. That sounds counterintuitive.
Right. But investors can trade these tokenized shares maybe on secondary digital markets before the whole project is even finished and operational. That's huge. It turns these traditionally locked-in long-term assets into something much more agile, more tradable.
Okay, accessibility, liquidity. What's the third?
And crucially, the third is transparency. Because it's often built on blockchain. The reporting, the record of ownership, the transactions, it's all immutable, it's transparent. That builds a huge amount of trust, especially for complex international investments like these.
So it democratizes access, adds liquidity, increases trust. What's the biggest takeaway from that shift for, say, an individual investor looking at this space?
I think the most profound thing is just lowering that barrier to entry, creating a much, much broader investor base. As Dr. Ghamari points out, this democratization isn't just a small tweak. It could genuinely reshape how marine projects get funded in the future.
Yeah.
It helps align those big public-private partnerships with, well, digital age solutions.
And does cryptocurrency play a role here too?
It can, yeah. Think about cryptocurrencies like, say, gold. These aren't like the purely speculative ones. They're often backed by tangible assets. Gold in that case. That asset backing provides a kind of stability, right? It makes them potentially an appealing bridge.
A bridge between crypto and infrastructure.
Sort of. A way to bring digital capital into these long-term infrastructure projects. Investors might use it to hedge against crypto volatility while still participating. And for the project, it expands the pool of potential capital, mixing institutional money with private digital wealth.
That's a fascinating evolution in project finance. Really complex, but potentially powerful. But okay, we're talking about huge developments on coastlines, interacting with marine environments. The environmental impact conversation must be huge here. How does sustainability factor into whether investors are interested or not?
Oh, it's absolutely central now. It's not just a nice-to-have or a side issue anymore. Not at all. Marine projects face intense scrutiny, quite rightly, over their environmental footprint. So what investors need to see, what they demand, are robust, measurable sustainability metrics built in right from the start.
Measurable metrics
Like using renewable energy for the port operations, like designs that are genuinely eco-friendly, minimizing disruption to marine habitats, even pushing for carbon-neutral operations eventually. These aren't just buzzwords anymore. For many major investors, these are non-negotiable. They're deal makers or deal breakers.
Does it move beyond just PR or a green label? It directly impacts the ability to attract capital. How does that commitment to sustainability then play out in the project's branding and public perception?
Well, from a branding perspective, when marine projects include genuine cause-related initiatives.
Like what kind of initiatives?
Things like funding serious coastal restoration programs nearby, or investing in local marine biodiversity research, or creating specific job programs for the local community. These actions, when they're real and measurable, they significantly boost investor confidence. And public support, too, which is vital. You know, the Aylan Times has reported extensively on this. ESG, environmental, social governance, has moved right to the center.
ESG, right.
It's now a core factor in the negotiations between port authorities and the big international developers. It's not just about whether the project looks good. It influences the fundamental assessment of its long-term risk and potential return. Investors are really looking through that ESG lens now.
Okay, this is all incredibly insightful. So let's bring it down to practical terms. For a corporation or maybe even a large investor group looking at these opportunities right now, what are the key actionable strategies they should be thinking about?
Absolutely. Let's distill it down. If we're talking practical investment and development strategy here, a few things really stand out. First, Aligning with those robust ESG standards isn't optional anymore. It's baseline. That means actively tracking things like carbon offset programs, really measuring waste management efficiency, proving your renewable energy integration.
Got it. ESG first and foremost. What else?
Second, leverage tokenization. Don't just see it as a novelty. Actively explore using digital platforms like Ayland, for instance, for that transparent fractionalized investment model. It's about efficiency and agility in raising capital as much as access.
Okay, embrace the digital tools. Makes sense.
Third, think about hybrid financing models. Don't just rely on traditional bank debt or equity. Look at combining those traditional routes with these newer digitally backed or crypto-backed solutions. It opens up a much broader, more diverse pool of investors globally.
Right, mix the old and the new funding sources. What about the project's positioning?
That's crucial. You need to capitalize on the urban revitalization angle. Position these marine investments not as standalone things, but as integral parts of the city's bigger story, its branding, its tourism strategy. Think of them as anchors for those thriving urban ecosystems we talked about.
Integrate it fully into the city context.
Exactly. And finally, maybe most importantly in the long run, measure the non-financial ROI. Look beyond just the revenue forecasts and the profit margins. Evaluate metrics like sustainability scores, track actual tourism inflows, gauge public sentiment. These are becoming critical indicators of long-term value, resilience, and ultimately success in this really dynamic sector.
This has been a truly fascinating deep dive. We've really seen how marine infrastructure investments from cruise terminals right through to these huge waterfront developments are such a dynamic opportunities, driven by, as you said, that deep urban integration, cutting-edge digital finance, and this growing, really undeniable focus on measurable sustainability.
Indeed, it's a rapidly evolving space. And maybe as we wrap up, here's a thought to leave you with. Consider how these massive, very physical, tangible infrastructure projects, concrete and steel by the sea, are now so deeply tangled up with these seemingly abstract worlds of digital finance and environmental consciousness.
Tangible meets intangible.
Right. What does it really mean for the future when physical assets, like a piece of a port, can be traded almost like digital tokens, and when their financial value is increasingly tied directly to their social and ecological impact? How might this reshaping of investment change not just where the money flows, but the actual physical fabric of our coastal cities and the communities that live there?
A lot to think about there. How value itself might be changing.
Something to ponder, perhaps, next time you find yourself down by the waterfront.